Good evening and Happy New Year. This is Ken Long from Tortoise Capital Management with the Daily Market Health Check commentary for January 4th, 2010. Starting off, we'll review the Market Health Check. We're in bull quiet mode. You can see the long decline of volatility to historically low levels. Just started a minor hookup here based on the last 2 days of relatively volatile price action. You can see the previous days, the very tight ranges that are in play. ADX is at 11.22, which is extremely low, but the bulls are in charge and have been for the last 2 weeks. In the dotted red lines, you can see these price support levels that have been noted from previous weeks' market activity. In this green box, we can see that we're indicating we're in generally bullish conditions. This looks like a tactical sell-off last week, which enabled market makers, I think, to gather some inventory that they sold going into the January effect today. The market is price is above the 20, which is above the 50-day moving average. The 20-day moving average is pulling away from the 50, and that's very positive. Short-term indicator is Williams percent R10 is showing the market is over bought on a short-term basis. The MACD histogram slightly above the zero line, but there's room to grow. What looks favorable about these market conditions is that this month and a half long period of sideways conditions has allowed the market to find its own level and digest. It never really failed anywhere inside here, and now with ADX at a low reading, there's technical reasons why the market is poised to take off in the first couple weeks of January. So things are looking very favorable here in a bull quiet mode and with plenty of room to run. Shifting now to the daily signal summary. Again, bull quiet on an annual basis. We're at 65 on the annual index and at 108 on the 10-day index, meaning we've broken out to a new high, and you can see that reflected here on the graphic for the NDX 10 closing at a new high. I like Merck, Home Depot, and Coca-Cola on their 10-day max pain because those are old reliables, and we know how to trade those. No signals in the overreaction or channeling systems. Pivot point for tomorrow at 112.74 inside the market. You can see the slope of the 30-day regression line has crossed over its 10-day moving average after a 1 standard deviation move away from average, and that's favorable. You can see how market volatility has just dropped off the map here and is now almost, it looks like almost 3 standard deviations below the average of the last 100 days. That's extraordinarily low on a historical basis, and we can be expecting volatility breakouts here going into the new year. ADX remains very low. And on our daily short-term setups, you can see an extraordinary number of 551W setups in the large caps. I'm always interested in Merck and McDonald's. Those symbols stick out at me. And then on the 3060 stealth candidates, which I like right now, we have AT&T, Alcoa, Verizon, Merck, Johnson & Johnson, and Home Depot being exceptionally well postured among the Dow 30. And then we have utilities, small caps, XBI is biotechs, South Korea, pharmaceuticals, and U.S. real estate, all of which are showing favorable quality improvement areas, but with plenty of room to run. On the triple screen, we've added a number of large cap stocks, and then also XLU is the utilities. That shows up on triple screen, but also on the 3060 stealth. So that's a pretty interesting one. The washout pattern, the single washout pattern we have in the large caps is GME, which is GameStop's, and with a 50-cent trailing stop, there's some potential for some nice rebounds. It had a big move today, but there's still a 2-to-1 upside if you use a 50-cent trailing stop. And so if there's additional momentum tomorrow, I'm very interested in that one. And now the daily tactical, you can see in the red highlighted symbols were large caps in the Dow that were the exceptional losers today, and old reliables Alcoa, American Express, Disney, and General Electric are there. I like General Electric automatically because it's oversold on the 10-day index. It's the only one in the whole Dow 30 that's in that condition. You can see GE is the only oversold, and you can look at all the ones that are highlighted in green are at 80 or better. If it's more than 100, you can see that it's very much overbought and closed at a new high today. Inside the ETFs themselves, what we had was an extraordinary move among all the basic commodities. Their mixed commodities, oil and natural gas, all had really big days today. Natural gas had a 5% jump, so that might be a potential candidate for follow-through as well. The green highlights here in the Dow are the ones that turned in exceptional performances on a one-day percentage basis. So 3M, DuPont, and IBM. DuPont I'm interested in just because I like stuff better than the rest right now, and at 33.7, it's favorable for on a share price basis. I like Merck up in here. You can see it's in the red on a 10-day max pain and 3-day max pain, so that suggests that there's still more room to go. Plus the fact that it was positive for the day means that it may actually be resuming. So there's still room to go to its swing high, and it's already started that reversion to the mean. So Merck is going to be on my short list. Plus it's a max pain candidate, as we saw in the previous chart. So we've got a number of good things going for tomorrow. I'm buying momentum. Especially in the techs and the small caps and in emerging markets. And I'm looking at any of the basic materials companies, so Cleveland-Cliffs, Alcoa, DuPont are going to be on my short list to watch also. So that's the market health check and the daily signal summary and the daily tactical. So thanks for your attention and good trading tomorrow.